Join me as I dive into the shocking impact of China potentially shutting down the $164 billion U.S. farming industry. Can I uncover the truth behind this crisis? China's influence on the U.S. farming industry is a hot topic, with the enormous figure of $164 billion hanging in the balance. This staggering sum represents the entire U.S. farming industry, which is why today's discussion is so crucial. U.S. farmers are facing unprecedented challenges due to China's recent actions, with tariffs and import restrictions at the forefront of the issue. These measures have dealt a significant blow to the agricultural sector, with many farmers feeling the pinch. The harsh reality is that China's actions have made it increasingly difficult for U.S. farmers to sell their products to Chinese buyers. Essentially, this has led to a substantial loss in revenue for farmers, which in turn affects the entire agricultural industry. One of the most significant problems is the halt in soybean sales, which were previously a crucial export to China. The ripple effect of this has been devastating, with many farmers relying on soybean sales to stay afloat. Furthermore, China's import restrictions on U.S. pork have also had a severe impact, with pork producers struggling to find new buyers. The bigger picture is that these restrictions are not only affecting farmers, but also the entire food supply chain. The lack of access to the Chinese market has forced farmers to look for alternative buyers, but this has proven to be a difficult task. Many farmers have been left with surplus produce, which is not only a financial burden, but also a logistical nightmare. The situation has become so dire that some farmers have even had to resort to donating their produce to charity, just to avoid letting it go to waste. Furthermore, the situation is not just limited to soybeans and pork. Other essential crops like corn, wheat, and cotton have also been affected. The decline in sales has had a ripple effect throughout the entire agricultural industry, with many related businesses feeling the pinch. When we drill down into the specifics, it's clear that certain crops are more affected than others. For instance, China was previously the largest buyer of U.S. soybeans, accounting for over 60% of total exports. This drastic reduction in sales has had a catastrophic impact on soybean farmers, with many struggling to stay afloat. The broader implications of China's actions are far-reaching, with the entire U.S. economy feeling the effects. The agricultural sector is a significant contributor to the U.S. GDP, so when this industry takes a hit, the entire economy suffers. Furthermore, the uncertainty surrounding the situation is causing widespread anxiety among farmers who are unsure of what the future holds. The statistics surrounding the crisis are nothing short of alarming. Since the tariffs were imposed, U.S. soybean exports to China have plummeted by over 70%. This staggering decline is a testament to the devastating impact of China's actions on the U.S. farming industry. The pace of the decline is also a major concern, with many experts predicting that the situation will only worsen in the coming months. The urgency of the situation cannot be overstated, as the very livelihoods of U.S. farmers hang in the balance. Another worrying trend is the rise in farm bankruptcies, which have increased by over 20% in the past year alone. This is a clear indication that the crisis is not just affecting farmers, but also the entire agricultural industry. In conclusion, it's clear that China's actions have had a profound impact on the U.S. farming industry. From the tariffs on soybeans to the import restrictions on pork, the effects are far-reaching and devastating. The crisis is not just limited to farmers, but also has broader implications for the entire U.S. economy. What do you think about the situation? Share your thoughts in the comments below.